but in seriousness, Dr. Shiller is one of the most significant economists, one of the most important writers today on issues like bubbles and financial crises. We're delighted to have him here. And so I would now like to call on Dr. Shiller to deliver the first Beattie Family Lecture in Business and Law, Animal Spirits, How Human Psychology Caused the Current Economic Crisis. Ladies and gentlemen, Dr. Robert Shiller.
And animal spirits, we think, is the big driver of the economy. Maybe the responsible for most of the fluctuations that we see. But that's contrary to the thinking of economists. They always want to talk about something concrete that we can look at. So maybe the central bank did it, which always struck me. They like to blame the central bank for all of our problems. But it doesn't seem to me that's usually right, because their job as a central bank is to stabilize the economy. So it seems kind of unlikely that they would do such a bad job of it that they would be the source, the primary source of instability. There's a whole school of thought in economics called real business cycle theory, which asserts that all of the drivers of the economy are technological change. It's a nice hypothesis. I don't think it's right. I don't think there is some truth to that. When they invented railroads, that created investment opportunities that drove the economy. And when the railroads were completed, they didn't have that. There's some truth to that, but it doesn't seem to be explaining things like now, for example. There's no change like that that underlies what's happening. So we have a theory of animal spirits in our book that emphasizes a number of things that are usually not mentioned by economists as certainly not central to what's happening, but we think they're central to what's happening now. There's 5 of them here. Well, first of all is confidence. Non-economists talk about it all the time, and I've just been talking about it. But generally, the economics profession considers it as something unmeasurable or inconsequential. But it's this fundamental thing. Do you think that it's good time? Do you think this is the time to invest or the time to hire? But it goes beyond that. I think also animal spirits should be a broader concept. And the other things that George Akerlof and I feel should really be emphasized, that there's other aspects of human thinking that change through time that explain economic events. One is our changing sense of fairness. And we can get very angry and upset when we think that we're not being fairly treated. We're seeing that recently. Since we hadn't seen so much of it when we wrote the book, but it's coming out now. The anger that's developed in the United States over the, I don't know, do you follow this story? AIG was given, the executives were given huge bonuses. I was just visiting the Los Angeles Times, and the writer there told me that he said he was just astonished at the email they're getting of anger. There was a lot of emails saying we have to kill those guys. Obscenities. He said, I've never seen anything like that. It's a little scary to me. But I think people, if they're not fairly treated, it affects how the economy runs. They have to feel we live in a fair and just society. The other thing that happens over a business cycle is corruption. Corrupt activities increase on the upside. And I make even a less strong term than corruption is bad faith. It goes back to ancient Rome. Good faith is bona fides. I guess you know that in a law school or something, Latin. Also money illusion, that people are confused by the money supply, or changes in the money supply and the change in prices. I'll get back to some of these theories. Just a few days ago, President Obama announced the public-private investment program. Well, actually, it was Treasury Secretary Geithner, which is a really dramatic plan for the U.S. government to subsidize lending in a different form. I think these are things that have to go forward And I wish they had gone faster, and I think they still have to go forward more. Unfortunately, they're reaching some kind of political limit because people are concerned about the public debt and the taxpayer consequences. It's unfortunate because this concern is slowing it down. It should be done immediately before the damage is done to our confidence. And finally, I wanted to say that this is also a time to remember justice for the forgotten people, the struggling people. And this is a theme. I actually had an op-ed piece in the Globe and Mail as part of Project Syndicate about a week ago. But I thought that when people at the G20 meetings in London, the best thing for them to do, on top of having a coordinated program of stimulus, is to show some tangible concern for lower income people who are struggling the most and hit the hardest. They're not deciding between Starbucks Grande and Starbucks instant coffee. It's much worse than that for many people. Just talking about the US and Canada, I think actually the most important thing is that the G20 countries should be concerned about the developing world. But let's talk about our own countries. The problem in the US is that so many people are being thrown out of their houses. Millions are being foreclosed because they can't make their mortgage payments. And it's not their fault. You know, if you lose your job, you can't make your mortgage payments. And even if you don't lose the job, a lot of people are on reduced income and in difficult circumstances. It's interesting that this problem is not uniquely American because the subprime lending occurred in Canada too. It just didn't, it took the crisis came mercifully sooner in your subprime cycle. If it wanted to continue, it might have developed into something really bad. But I just read in the Globe and Mail that there's an estimate of 25,000 Canadian subprime borrowers may lose their homes because they can't renew their mortgages. And that's not a big number, but I think it's something that we have to, well, I won't tell you what to do, but I'm thinking that's something that ought to be kept as foremost in our minds, just because of the effect it has on confidence, on our sense of justice, which I think is related to confidence. Right. We had, in this boom period, placed our faith and our trust in things that weren't so safe. And that means we don't know what to do or where to go. There's a possibility of redistributions in the future. There's a possibility that things will be taken apart. For example, people forget that the US government has defaulted on its national debt before. When did they do that? It was in 1933, at the bottom of the Depression. They didn't totally default. They just took something, like a third of it. And the way they did that was they didn't say they defaulted. They'll never say they defaulted. What they did is they invalidated the gold clause. The national debt in the United States in 1933 was promised in gold. You could demand so many ounces of gold. And President Roosevelt said, it's just not possible in the Depression. We're not going to pay it. So he devalued the dollar and said, you have to take this paper money, which is worth substantially less. That kind of thing may happen again in any number of countries. And so people wonder, well, where am I? And I mentioned this inflation that could build up. There could be, it wouldn't be a big surprise if there's a massive inflation. So that could wipe out the value of some of your assets. So the question is, what do you do? And I'm going to give a very uninspired answer. I'm not trying to sell you financial products. I think this is a time for diversification across a number of assets, broad asset classes. So that means not just one thing, not just stocks, not just one kind. I would put my money in many different places, and including places that don't look so great now, including even real estate, because that's another asset class which is very different from the stock market. You know, the real losers are the people who put all their money in Bernie Madoff. You know this? And believe it or not, some very smart people apparently did that. And I just think that you have to spread your nest egg all over now. And different countries, different kinds of asset classes.